Today is Monday, September 9th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Alan Bush, ADM Investor Services Senior Financial Economist, and Mike Nemec, ADMIS Grain Analyst. Mike, let's start with the grain markets this morning. Here we are, early September. What's driving the grain markets currently?
Okay, technicals aside, because we're either at contract lows or making new contract lows, there's 5 topics that I kind of looking at as far as keeping the market a little bit on the defensive and pretty much in a non-bullish environment, as I kind of call it. First off, our monthly USDA reports. They've been coming out with a negative tone as far as carryouts go, both here in the U.S. and in the world. We have sufficient supply, so we're not having any threat there. The other thing has been the weather. I know we had a little bit of a run-up with the weather back in April, May, as far as getting the crop in the ground, but since then, crop conditions and weather has stabilized, and it's kind of been taking buying interest away from the market, and also even around the world, the weather has been somewhat mundane. So there's been no driving force there. Third one is our U.S. demand. Our U.S. demand has been pretty poor. We ended the marketing year for corn and beans last week. We're currently running 18% behind in corn sales versus a year ago. Beans are running roughly 14% behind, 17% behind in that neck of the woods. So once again, our demand has not been all that great. And make it even matters worse, we're starting a new marketing year, and we have roughly around 6 million tons of corn on the books versus roughly around 12 million last year, and we have roughly around 6 million tons of beans on the books, around 14 million tons last year. A couple more, the political environment has been non-bullish, either be it the U.S. and the Chinese trade wars. The ethanol guys in the U.S. are kind of mad about what's going on with the ethanol RINs versus what's going on with oil. They're trying to make a package for the ethanol guys, and right now, what happened Friday didn't meet their objectives. And then you also have things like the U.S. and Japan got together with a corn deal. Wall Street Journal ran a story here this morning talking about where the Japanese, one problem, one flaw, they don't need the corn. So those 5 things are things that are topics that I'd like to see turn around to at least once again, as I say, get us out of this non-bullish environment.
Later this week, Mike, we have another the September monthly supply demand report. Do you have any estimates there?
I do. We have a corn yield that's coming in at 167.2 versus the month ago 169.5, and for the beans we're looking at 47.2 versus 48.5. Once again, nothing too radical versus what the trade wants to be talking about as far as acreage and yield goes, because the production numbers aren't going to be all that, once again, negative. And then the carryouts, more importantly, they're looking at a 2.4 carryout for corn. We're currently looking at a bean carryout of 1 billion, and for a wheat carryout of also 1 billion. So right there, we're not really running out of supplies for our row crop, and once again, it's something that keeps us in a non-bullish environment.
Mike, what's the fund position look like right now?
Okay, so the funds, they have been adding or continue to maintain a negative position. So once again, the order flow has been on the sell side, pretty much like how the topics have been on the negative side. As of Friday's close, we've got them short in the neighborhood of around 15,000 soft red winter wheat. And I want to bring this up too because they run a chart on the wires, and just for a little food for thought in here, got them short 15,000 short red winter wheat, and the most they had maybe in the past year is 82,000. For the corn, 156,000 we have them short. They were short as much as 325. For the beans, 81 versus 170. I don't have any numbers for meal and oil, but they're short 46,000 meal and 19,000 soybean oil, and I believe that they have more room to run in that as well. And in the hard red winter wheat, 45,000, they got as much as 60,000. So once again, we're not at the extremes as of yet as far as money flow goes to the short side if they are willing.
Alan, what's going on in the financial markets? The stock index futures saw some decent strength last week.
Well, basically it appears that there is a better tone to the U.S.-China trade situation. Of course, we are subject to the ups and downs of the headlines as far as how that goes. But right now, things looking better there. And actually, we are not that far from new record highs in the S&P, the Dow, and the NASDAQ. So that's the short-term view. The long-term view is that we still have interest rates very low, and that is a very bullish long-term situation for all of the indices.
Speaking of interest rates, a few weeks ago, financial futures were factoring in as many as 3 Fed fund rate cuts before the end of this year.
Yes.
Now, 1 to 2
Exactly.
are expected. What caused this change?
Well, basically, it appears that the U.S. economy is holding up better than elsewhere in the world. Of course, the U.S. economy is slowing to some degree, but there have been some bright spots in some of the economic reports. As of late, retail sales came in stronger than expected, durable goods also coming in better than expected. So I would have to say, even though a lot of the numbers have been a little weaker, they are not as weak as some analysts had anticipated, and that means the Fed may be a bit less aggressive in lowering interest rates this year.
Finally, Ellen, gold futures advanced to a 6-year high last week, but since that happened, we've backed off a bit. What is the outlook for gold futures now?
Well, there's been some flight to quality long liquidation in the gold market. However, in the longer term, the fundamentals remain extremely bullish. We have had central banks very aggressive buyers last year, and they're continuing this year in the same course of in magnitude of what they're buying. Interest rates still likely to continue lower globally, even in the U.S. As we mentioned, rates still likely to come under some pressure. So all of the major factors affecting the gold market seem to be favoring the bullish side. There are some chart objectives that have gold trading possibly as high as 1,600. So this is just the beginning, I believe, in a long-term bull market for the gold and also the silver.
We'll have to watch those markets. Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.